why is it important to look at the different stages of a growth stock?
Yeah, well, usually when a growth stock makes a great move, it's usually 1.5 to 2 years, based on, also getting help from the general market. But and there are usually certain stages along the way. First, it's the first stage is the basing period, the sideways period, and some of these are shorter, some of these are really long. The example of really the 4 stages is Ollie's is the first base is really 8 months from 2015 into 2016, and this was a new issue, but the company had actually been in business for over 30 years, so this wasn't really a newcomer to at least the economy. And then that's the first stage, the basing period. The second stage is the move of the stock, and and all these different stages have different characteristics in terms of price, in volume, and how the price is consolidating moves on the way up. The third stage is the top, and that took place between the end of 2018 and 2019, and that occurred over, it looks like, about an 8 or 9 month period of time. And then the decline, the 4th stage, is the stock coming down from 100. I mean, it looks like it got all the way down to 30. That's the 4th stage. That's the decline. And lots of growth stocks, after having a huge move, really actually retrace a lot of the previous move. Now the stock is setting up again. I mean, this is just stage 1. It hasn't done anything great yet. Relative strength is awful, but it looks like it's basing out. And I point this out just because the earnings look okay, but this has been a very, very nice growth stock. It's the last 4 quarters have been strong, but the estimates look like they slow down in 2022 and 2023. So it's one to watch. It's something I keep on the radar because it's had a great move in the past. It's got good management, and they're a regional story. I think most of their stores are mostly east of the Mississippi, but they're going national. And see, they have 330, at least on the count on MarketSmith, 388 outlets right now, and I think they're going to about 800. So they've got a long way to go in their growth. Something to keep an eye on, something that might be setting up again. But this is an example of the stages. You got 1, the base; 2, the big move; 3, the top; the 4th is the decline, and then it can start all over again. So something to keep in mind. And we've got a couple of examples of stocks. I'll go to Generac, and that's on 6/14/19. And
14, 19.
On a weekly?
Yeah, you can. Yeah, weekly is great because we're going to look at the big picture first.
Okay.
And on the weekly, you can see that's a really nice long base. The base started in March of 14 and continued all the way until the stock right at this point in June of 19. The other thing that's important to look at this is a stock that was very successful in the past. It had a huge move, a great move. It went from 12 all the way to 60. So it had a five-fold move, and then it went sideways for 5 years. And what usually happens, and I see this happen over and over again, when a stock has a great move, it either gets ahead of its earnings, or they've reached the end of that product cycle, and then it takes some time for them to reestablish new products, get new products out the door and developed, and it takes them a number of years. Some companies it takes longer, some companies not so long. Technology cycles are usually a little shorter because that can change so quickly. But anytime you have a stock that has a huge move like this, you have to be careful that you keep on trying to play it, because lots of times they sit out. So Generac sat out for for that 5-year period of time, and then formed a great little cup and handle right, right in there. And if you go to the daily, then you'll be able to see that forming. Yeah, so the left side of the cup started at 60 and then came all the way down back into 45, and that was that was a 26% drop off the high, came all the way back up to 60. And maybe you could have gotten a low buy point, but it jumped for 2 days up to 60, and then it drifted down. Importantly, to look at the volume on that move up to 60 versus the volume as the stock was drifting down. This is what you'd love to see, is a huge volume up, and then as it comes back in, most of those days, it looks like most of those days were below average daily volume, and then actually hit the 200-day moving average, kind of had a shakeout for one day at that 55 level, and then started taking off. And you could have bought as it broke that downtrend from 60 down through, I guess, 56, 57 area. Yeah, and that's where you could have gotten started. You could have gotten in even still at 60, because the explosion in volume was very, very strong. You see, you got about, let's see, 1, 2, 3, 4 out of 5 days were very, very strong volume, and that launched the move. The other thing to look at is look at the relative strength line. It hit a low when the stock hit a low of 48, and then started making some nice progress, and so was up for, that was close to, I guess, 2.5 months. And you want to see it, you want to see some nice, you want to either want the relative strength line near the highs, which it was fairly close to the highs, or you want to see a nice uptrend for longer than 2.5 to 3 months. So, and then look at what the relative strength line did within a few days. That went right to new highs, confirming the strength in the stock. So, and so that's the basing period of Generac. That's phase 1 of what was happening. Now we can go to the other example. Yeah, you can see the weekly volume. Also, the weekly volume is some of the largest weekly volume that's traded in the last, it looks like, 7 or 8 months. That's what you want to see on a breakout. Those are the ones you let go. Those are the ones you say, hey, I'm going to keep these because it's made such a nice move in a short period of time that fits the, they talk about the O'Neil, I guess it's the 8-week rule or so. So that's an example. Let me give you another example. Let's go to Lulu. And this was Lulu back, Lulu back in April of 2018. And let me bring my chart up so I can get a detail here. Okay, so this is April 2nd or so of 2018. And here's, if you look at, here's another one. Here's another example. I guess you'd have to go to the monthly. Look at the move that stock made in 2009, 2010, 2011. Then it goes, then look at the sideways. It then puts in really basically from June of 2012 all the way to March of 18. So you put in a 6-year base. It's proven itself that it has had products in the past, and then it went sideways for 6 years. They had a bunch of problems with quality of some of their products, and I think they had a few changes in management, and then got themselves back on board again, and then set up this nice long base at 80. And you can see even on that chart, relative strength line was breaking out on that monthly. Yeah, and see, it doesn't have to come all the way back up to the highs it was back in 2011, but that is a, that's a 5-year 4 or 5 year high that that relative strength line is making, and that's fine. Then if we go to the daily, then you'll see what was going on. And here the stock had a nice move up. Let's see if I get my daily. It had a nice move up, you know, off the lows in the mid 50s up into 61, which was the high going back all the way back in August of 2016. So came up to previous highs, and then the action got very, very tight, which was good because if you could, Allie, if you could show the S&P, what the S&P was doing, yeah, that's the S&P 500, and the S&P 500 during that period of time was actually that, I think that might have been a bear market or at least a very nice, very big correction. And this stock was holding its own during that correction. And that's what you really like to see. It didn't really decline much at all. The relative strength was still intact. The relative strength line was actually hitting new highs while the market was having problems, very, very tight. And then it exploded on some, that might have even been an earnings report. I'd have to check, but you see the size of that volume right there. And the stock took off, and it had, you know, 2 days up, and then 1 day it was down, but the down volume was much lighter than the previous 2 days, and then it just kept on going. I mean, you could probably move your your change data just a few months farther, and you can see it kept on moving higher. But that's the action you want to see. That's the relative strength line you like to see. It looks like the stock consolidated, actually pulled back to the 50-day, and then it continued to have a really, really nice move. And next week we can look at stage 2 and what happens during a stage 2 base in a stock's move.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.